What's up, Mortgage Coach community? Dave Savage. It is Q1 of 2019, and I am interviewing Aaron Coker out of Portland, Oregon. What's up, Aaron?
Dave, how you doing? Thank you once again for having me join the community. I feel blessed to be a part of this. It's always awesome.
Well, you do a great job. I've interviewed you a lot of times. I'm going to put a link down below to one of my favorite past interviews with Aaron. So if you like what you hear, there'll be more below. So Aaron, you're a black belt in Mortgage Coach. You've done, thousands of total cost analysis. For anyone who hasn't heard me interview you before, just tell us a little bit about your mortgage practice, what kind of production you do, and then let's get into some scripts, some big ideas.
Yeah, absolutely. So I've been doing this for about full-time 18, 19 years now, so a long time. And my business is mostly purchase. I'm at about, look at the numbers here, last year we were about 72% purchase, 28% refi. So made a big shift probably 3-4 years ago, 5 years ago, I think at this point, to focusing on the purchase side of the business. And I think Mortgage Coach has been an integral part for me. We closed 121 units. I keep looking over here at my numbers last year. So not too bad, a little bit down from the year before, but this year we're off to a great start. It's been a great week for us. 7 new transactions. Everybody gets a Mortgage Coach total cost analysis that comes through our doors. So I'm excited. Things are starting to turn the corner and pick up again for us.
Yeah, and you're a producing branch manager, right? So you
Correct.
are leading a team for personal production. How much is your branch doing? And how many?
I don't have that data off the top of my head. I would say on average we're probably at about an $8.5, $9 million branch typically if you average it out through the course of the year.
And how many units?
Average wise, probably 30-ish to 34 on average per month.
So guys, this is a very successful, busy mortgage professional, killing it in the market. One of the things we talk about, and this is part of what we call our mortgage strategy interviews. This is actually number 26. So this is the 26th time I've done this type of an interview where it's how are you showing up as a mortgage advisor, mortgage wizard, so that your advice matters. The realtors that refer you business, they know that, hey, Aaron doesn't just keep his promises and close loans on time, but he's a mortgage wizard. So talk to us a little bit about that. And by the way, what do you call yourself? Do you call yourself a mortgage planner, mortgage advisor?
You can call me whatever the heck you want, Dave. Doesn't matter to me. I'm just
how do you position yourself in the marketplace?
I'm a loan officer. I don't think I do loans pretty much. My card says branch manager, but titles really don't matter to me. I think it's relationships are probably the most important thing in this business when it comes down to it. And for me, I mentioned earlier, every client, no matter how big, how small, is going to get a total cost analysis. That's what I focus on when it comes to Mortgage Coach is total cost analyses, I suppose. And I like to keep it simple. I don't like to confuse. I don't like to give too much data. I like to listen to the client's pain, kind of get an idea of what they're struggling with, what they want to accomplish with this transaction, and then present the data in a clear and concise manner. And I really appreciate the updates you guys have made as of late, especially with the ability to record the video in the new overlay. I thought that probably came on 3-4 months ago. Was that about right?
It's pretty recent. So you're liking to do
the upload.
It's easier to create a video and add a video.
Absolutely. And I do everything I don't do anything on my cell phone. I do it all on the desktop, laptop, in the web browser.
Good. So for anyone who's new to Mortgage Coach, you'll see a total cost analysis in just a minute here. But it's where you can put the numbers in a way that's a competitive advantage, and you can add a video to it. So let's talk about some of the questions you ask at the point of sale so that by the time you deliver the total cost analysis, it's got value. What are the typical questions you ask?
Every client I meet with, it's kind of the same. They get the same, not sales, I don't want to call it sales pitch, but my presentation. So I talk about the 3 things that it takes to qualify for a loan. It's going to be your income, your assets. For the purpose of a purchase, the assets are going to be your down payment, and then it's going to be your credit. And then the combination of those 3 items will dictate what we can and can't do. So then I go a little bit more in depth about that, start getting some information from them. And a lot of times in my mind, I know what direction we're going to head, but I want to make sure the client goes on that journey with me so they understand it's not just me telling them what to do. Okay, it's just got to be more collaborative. We got to do this together. And then from there, I talk about the 3 main categories of loans. You got your conventional loans, Fannie, Freddie. talk about Govy loans, USDA, FHA, VA, and we talk about jumbo loans. And even if they're a first-time home buyer, and I know it's going to be an FHA loan, or I know we're going to do home ready, home possible, 3% down, I'm still going to talk about each category so they understand that I'm not just skipping over it. You know, I'm giving them the same attention that I'd give anybody else.
So it's education. So you are, while you're not positioned, you know, calling yourself a mortgage advisor, you're making sure that every person that meets with you gets a certain level of education. How much time do you think you spend on, let's call it that overview education? How much time is that?
So it can be quick if they're more experienced, or if it's their first time, they'll have a lot of questions. And I ask them, do you have any questions? Does that make sense? I'm always checking back in just to make sure, because a lot of times you'll meet with people, and I've done this, like when I talk to my insurance guy and I do this. I have no idea what the hell he's talking about, but I trust him. And sometimes clients will do that. They'll smile and nod, right? But I just want to make sure they actually understand what I'm talking about. So that can be anywhere from 5 minutes to 15 or 20 minutes. I mean, income.
Well, that's good. 5 to 20. Yeah, I mean, you know, and I hope a takeaway for everybody on this call, especially if you're new or you're not closing more than 10 loans a month like Aaron, that he's consistent. He's got a way that he shows up, and it's consistent. And it's education and advice, because if you're going to compete with, you know, online lenders, the Amazon mortgages of the world, they're not going to be the educators. You know, they're going to be I can close your loan faster and easier. Here's your price, and it's going to be the price and speed game. And so if you are going to compete, hopefully a takeaway everybody's getting is you need to deliver advice, and that means you need to do it each and every time with each and every family.
Absolutely.
So we've asked all these questions. You kind of know where it's going. You're getting ready to give them the total cost analysis. How do you position it? What do you call it? And just give us 30 seconds to a minute of scripting on how you position that for the family.
So what I do in this case is I'll let the client know, you know what, if I'm face-to-face, I said, let's just I'll ask them, hey, when you're online looking at houses, what kind of price point are you looking at? And they'll tell me, and okay, 350, 400, or 500, or 700, whatever that numbers may be. And then I'll ask them, do you have an idea what taxes might be? Because in our marketplace, there's no rhyme or reason to property taxes. There's no formula. It's just they are what they are, and they're all over the place. And then I'll even ask them, do you have a property you're looking at, you like? And then I'll have them give me that property. And then I'll go and model that out right there within Mortgage Coach. So they're watching me input the data, and I've done enough.
So live. So are you doing that live, where you send them the link and you're going through it?
So if it's face to face, I'm doing it right there when they're sitting at my desk, and I can knock them out in probably 4 minutes, 5 minutes at the most. So it's pretty easy for me to do. I've done enough of them.
So by the way, anybody who's listening to this and you're like, oh, Mortgage Coach takes a long time. No, it takes 1 to 5 minutes to create this. Now, once you've done it 10 times, you know, you got to do it a few times. So it's quick and easy. And then what do you call it? Like when you start to show it to the client, what do you say?
I just say, well, just take a look at let's take a look at a couple of properties and see how the numbers pan out. See if that meets your budget. Because the one question I skipped over this, but one question I always ask is, what's your payment comfort level? I never want to go up to what can you qualify for, but what do you feel comfortable paying? And if they tell me $1,900, I know that's probably going to end up being a $2,100 or a $2,200 mortgage payment.
Yeah, right.
They'll start seeing houses and they'll get excited, and they'll figure out a way that they can make that work in their budget. But yeah, we'll look at the data right there. I don't call it anything particular. I tell them, hey, I'm going to send you a link. You're going to get this. So remind me so I don't forget, okay? This is going to be your dedicated link. And all you have to do is click on it, and we can get on the phone. You can say, hey, Aaron, what's this property look like? And then I can show you right there real time, and you'll see what I'm doing on my computer. But don't worry, I can't see you. Ha, ha, ha. So that's kind of the whole spiel.
So let's do this. Pull up a total cost analysis.
Sure.
I want everybody to connect it on. So if Aaron is in person, then he's seeing a screen and he's walking it through it. If he's not in person, he is sending a link to the total cost analysis, and he is building it out so it's a live experience. Yeah. So I just want to make sure there's 2 different experiences. I'm also going to put a link down below to a LinkedIn article I just published a couple days ago called How to Compete and Win with Online Lenders. Mm-hmm. And so no doubt getting face-to-face, having this, human-to-human connection, but it's technology enabled is a must. Mm-hmm. And if you can't get face-to-face, you still need to have this, human, high-touch, high-tech experience. So I'll let you know when I see it, by the way.
And I will say, Dave, what we're about to do right now, I will do with my clients too. Use the same technology. I use Zoom. I use Zoom meetings for my clients. That's what we're using. And then I'll do the screen share and I'll show them exactly what we're about ready to do.
Well, let's do it. For the next 2 to 3 minutes, pretend that we're a family, that you're walking this through. And we got about, 8 more minutes, because I like to keep these 20 minutes-ish. And then we'll close out with how does this help you win more business? So I'll tell you when I see your screen.
All right. So there we go. And there. All right, ready? Good, looking good?
So there is a total cost analysis.
Yeah, absolutely. So again, you can see I don't use all 4, not that you can't use all 4, but as a consumer, I don't like a lot of choices. When I go to a restaurant, give me like 3 choices, all right? Too many choices, and then my mind just goes, shoot, I can't figure out what to order, all right? So keep it simple. In this case, what we're looking at is someone who wants to buy non-contingent, but what the issue is she likes the mortgage payment she has right now. So she's got approximately a $1,500 mortgage payment. So what I showed, here's a 20% down purchase. All right, here's your current payment. This payment will include taxes, HOAs, because it's a condo, and then the approximate cash to close. But again, we want to focus on how do we get to that $1,500 payment after she sells her home. So she talked to her financial advisor. We're all on the same page that, hey, let's just keep that budget the same for you moving forward. So we looked at the option of doing a recast. So what I did is I built this out. I said, okay, the mortgage you started off with is $300,000. That's why I used the $300,000 right here. We need to pay that down to $121,000. And I said, okay, so you sell your house in 4 months. So you will have made 4 payments on that mortgage. So when you do a recast, that basically says, hey, we're going to pay the loan down, we're going to keep the rate the same, and we're going to recalculate the payment based on how many months are left on that note. So I said, hey, there's been 4 payments, so we got 356 months left. And we come up with $1,500 approximately for the new payment. So she would need to come to the table after selling her house with $179K, and that will still leave her a substantial amount left in that bank that she can fall back on for worst case scenario. So this is one example, again, real simple.
A couple of things. Scroll to the top real quick.
Yeah.
I want everybody to see this is personally branded advice. It's got Aaron's picture, it's got his company information, and it's advice. This is a competitive advantage. And then I would position this in, when you look at the Mortgage Coach mortgage strategies, whether it's on our website where we have mortgage strategies, this is a move-up buyer. This is a move-up buyer where they wanted to get more lifestyle, but they wanted to keep their payment the same, but they didn't have the cash to do it. They had to sell their home to do it. So he was able to say, hey, here's our goals. Here's their concerns. I'm a mortgage wizard. Here's a strategy. And he was able to net this out super quick.
Yep.
By the way, Aaron, not that I want to get into one of these strategies right now, but sometimes with the move up buyer, you're having to create a sense of urgency. Like, hey, you're going to build wealth faster. And, do you ever do cost awaiting analysis or why buy now?
Sometimes a little bit. I don't want to sell with fear. I just, want to sell, hey, this is the reality, right? I mean,
but I'm talking more like a move up where it's like, hey, by moving up, you're going to build wealth with real estate faster. Is that something? Not necessarily.
Absolutely. Yeah. The power, I would call that the power of leverage, right? So you have, I mean, you have multiple asset classes working for you. She could pay cash after she sells her house, but then what? She's out, another 120 grand. It's not working for her. So,
so you have something you call power leverage. Now, how often do you add a video to your TCAs?
It's right there. Boom, every time.
So every time, even whether they meet you in person or whether it's all digital, you're still.
If it's face to face, I won't add a video. But then if I do an update, I will add a video when I send the new update when we're not in the office together. Or any updates I make, I'll do it in video.
Yeah, and my only pro tip on top of that, especially if you meet someone in person and you find out that, hey, there is a key person that's not in the room, like a father-in-law that's given a down payment or a buddy at work that's going to try to sell their lender, you still might want to add a video with face-to-face if there are stakeholders who are not there. So let's do one more strategy. And anything else you want to share on this before we do one more strategy?
No, I mean, but you mentioned father-in-law. I got a client right now that her dad's giving her a gift, and he saw the total cost analysis. He saw the video. I was walking through it with him. He wanted to make sure he understood what was going on. So And I always get positive feedback on the video. Don't be afraid to record a video. Just be yourself. Don't do a bunch of takes. I like it short and sweet. Again, create a call to action. You want a reason for the client to reach out to you and call.
What give us a feel for what you'd put in a video like, and I know they're like less than a minute, sometimes less than 30 seconds, but
yeah.
What are your videos?
So, hey, it's Aaron Coker here with Cross Country Mortgage. Just want to give you a quick heads up. Here's the information I promised I was going to send you away. What we're looking at here is 20% down purchase, and then what the house would look like after you paid down that mortgage to keep that payment at $1,500. Let's jump back off the phone together, and I'll walk you through the data. Short and sweet. Yeah.
So he said their name, personally connected, showed that he cared. He's showing that he's respectable because he's putting the numbers. He's showing next level transparency, and he's driving a call to action. So love that. So let's do one more TCA, and then let's wrap this call up.
Yeah, one more. This one, again, somewhat similar. Purchase market, client wanting to buy non-contingent. I think we're seeing more buyers. Found the dream home, all of a sudden want to make an offer on it, but has a bunch of equity tied up in their existing home, but really chomping at the bit to make an offer. So what I want to show them is this is kind of a first-second combo. Doing a first mortgage to 483, and then that's starting point, your payable and interest, and then what's going to happen to the sale of their house, and they pay down the line of credit. So now we're saying we're taking $173K from the sale of their house, paying down the line of credit, and this is what's going to happen to the payment. Payment goes down around $900 a month. And then we look at the more info section. You can see the payment, or excuse me, interest-only payment on the second has gone down. The first stays the same. We're not changing that. And then if you look at the reinvestment strategy, this will show you the balances on the respective mortgages. Started out at $213, paying that thing down to $40,000. I did 40 just so they weren't out of all their cash and they had money to work with the house. Clients also taking a 401k loan to help fund the down payment, so they need to pay that back as well. And then they can use bonuses over time to get rid of the rest of the HELOC should they choose to.
I love this. So guys, every single human being, when they meet another human being, they're asking themselves, do I trust this person? And do I respect this person? And you tell me, if you were meeting with Aaron, the fact that he's asking great questions and that he's delivering this modern experience, do you trust him? Yeah. I mean, he's showing that he's got your best interest in mind. He's providing you a next level of transparency. And do you respect him? Yeah, most loan officers are not providing this type of value and insight. So he's rapidly and quickly and consistently earning a combination of trust and respect. So I want to remind everybody, this is part of a series we call our mortgage strategy interviews. I've interviewed a lot of amazing mortgage professionals, everybody closing over 10 loans a month on what they're doing, how they're doing. Also, in our Mortgage Coach website, we have a page. If you go to member services, it's called Mortgage Coach Strategies. And I can assure you that this is going to make it. And we are showing you examples of the Mortgage Coach, the best of the best strategies. Actually, I was on the wrong page here. Let me click on it. Mortgage Coach Strategies. And think of this as like an obstacle course, where like if you want to become the ultimate mortgage wizard, these are the best of the best, where we've called out based off of different sales situations, what are the best ones? We'll probably call this something along the lines of, move up buyers, where there's a contingency, move up buyer contingency strategies. And it includes an interview, and then it also includes the TCAs. So think of these as like an obstacle course. If you want to become a mortgage wizard, a mortgage advisor, to where your advice makes a difference, go through this. Aaron, 1 minute left. Any closing thoughts or advice for any loan officers that are watching this?
Yeah, I would say that do a video every single time. Don't be afraid of the camera. Embrace it. That's where the future is. You will get nothing but positive feedback from your clients. And in both these situations, I could show you emails of the things, oh, this presentation was so amazing. And the second one I just showed you here, she was just loving life. She was so happy and excited. Just be yourself. Yeah, be yourself. Have fun with this job.
Hey, two last questions. Mm-hmm. You're a branch manager. Mm-hmm. Any advice to branch managers on getting their loan officers to use Mortgage Coach? Because you've done a great job of, not only do you use the total cost analysis a lot, you know, your branch does a good job. Any advice you have for branch managers on how to get better?
I would just, you know, maybe anecdotal proof. Share with them the feedback you're getting from your clients, the positive feedback, and like, look what this person said. And I've heard this from my employees as well, that, hey, so-and-so loved the video. And I would also recommend showing them ways to simplify the process. I've got 2 templates I use. I've got a purchase template and I've got a refi template. And each one, I only have to, on the purchase template, I have to put in an escrow fee and a title insurance fee. On the refi template, I have to put in a title insurance fee and maybe adjust a couple things. That's simple. I mean, it's so easy. I'm not putting in the fees every single time. I've just got 2 templates.
So one last question. Mortgage Coach is the key to conversion. Prospecting is the key to having leads so that you can't convert. How much prospecting do you do a day, and how many days a week do you prospect?
Oh, let's see here. Got my number as 13 hours so far this week. Last week was about 20 hours. So prospecting time is green time. Prospecting is meeting with clients, on the phone with clients, calling realtors, going to see people face to face. Right when we're done here, I'm headed to an inspection where the realtor will be there and both the clients will be there. So those are two more interactions to solidify that relationship. Even though we're under contract, they've got friends, right? They've got family who may be looking to buy or sell. So it's all about the basics, Dave. Shaking hands, kissing babies, not being afraid to talk on the phone. A lot of times we get in our own way, create these conversations in our head of how the conversation on the phone is going to go. Just call. What are they going to say? No. All right, move on. That's okay. No big deal.
So here is the Aaron Coker playbook. Prospect 20 hours a week. Every single family gets a total cost analysis so they have clarity and value. Put a video on it. And then if you're a branch manager, lead by example.
Absolutely.
If you got value from this, give it a like it below. There'll be links to his actual total cost analysis in the description. Share this with your mortgage friends. And Aaron Coker, you the man, brother.
Oh, thanks.
Appreciate you.
Absolutely. Take care, everyone.
Everybody.